I want to show you something today that most traders completely ignore, and it is the reason why most traders keep chasing intraday noise while institutions quietly build positions. I'm going to talk about this particular stock and what happens when a daily demand imbalance like this one over here lives inside a weekly imbalance and inside a monthly one. And that's what I call nested imbalances. Probably you don't know what an imbalance is, but this is the concept of nested imbalances. And once you understand this, your whole view of the stock market changes. And yes, as I always say, patience is involved, a lot of it. Sorry, scalpers and intraday traders. Okay, so let's talk about this. I'm going to use XCEL Energy Company on the daily time frame here, XCEL. Okay, to show what I'm trying to talk about. And this, first of all, a little bit about this company. Okay, it is a large US electric utilities company, and very briefly, it is operating a regulated electric, gas, natural utilities company, and it's not a hype stock, it's not a meme stock. Institutions love this kind of company, and institutions are exactly who create supply and demand imbalances. So the thing is this, we've got, like I said, this impulse. Let's focus on this impulse, okay? I want to teach you today about the most powerful concepts in supply and demand stock trading and price action analysis, and this is nested imbalances. Okay, so now you see a large impulse over here with a large candlestick here, and okay, what is different about this one? I mean, we are taking a look at the daily time frame. If we take a look at the 1 hour time frame, which is very common in the stock trading strategies, well, you see that now the 1 hour is reacting strongly. Why? No idea. Okay, because it was clearly showing strong impulses. Look at the size of these candlestick bodies over here, and then suddenly it stops. Okay, it engulfs. Okay, and then it reacts to this blue zone that we have down there. And but if we are looking at the smaller time frames to a scalp or to do stock intraday trading, then you are missing the big picture. Okay, and this is something you won't find explained properly in most trading education, because this is a concept I came up with. This is proprietary. Okay, it's nested imbalances and many other concepts I came up with over the years, and and it's not mentioned in most trading education because not because it doesn't work, but because it requires patience, and patience is not a very popular thing in the world addicted to 5-minute charts, as you already know. Okay, so what are nested imbalances? Okay, look at this impulse over here. Like I said, this is the largest candlestick body in a long time, if not the largest one in, if you compare this candlestick over here, which is about how much? Almost 8%, probably this one together with this one back in April 2025, and now it's the 2nd of January 2026, the beginning of the year. This one and this one are the two largest. Okay, so this one is large. Okay, and then it took a lot for price to retrace to that area. So how do I know, or how do we know that price is going to react to this imbalance? Okay, well, there are rules for that, and probably if I am good at teaching, you will understand this at the end of the video. Okay, so, and it has to do with the nested imbalances, because when price reaches that imbalance, the trend is not up anymore on the daily, but the bigger time frames are. Okay, so in simple terms, a daily demand imbalance here, like this one on this American stock in the utility sector, $72 per share, is inside a weekly and inside a monthly. So I'm going to show you. Okay, so it is in control and reacting. So if we now zoom out, I mean, do we take a look at one bigger time frame than the daily time frame? So that means daily plus one. The next time frame is not 2 days or 3 days or 5 days. It's 1 week. Okay, the W. So we're going to click on the W. Okay, so when we click on the W, we see that we've got also an imbalance here on the weekly. And look at the strength of this candlestick here, which is as big as even bigger than the daily candlestick we had before, okay? It's 10%, 11%, okay? So since prices fractal structures live inside other structures, bigger and smaller, and this is a core concept of price action trading in stocks and cryptos and forex and all the markets, and it's explained in detail in my supply and demand methodology and the course, okay? But most traders never see this coming. Why? Because they are obsessed with the smaller time frames, okay? So they have no idea why price is reacting, okay? Because they are just looking at the leaves, at the branches of the trees, not even the tree. Imagine the forest. No way. That's science fiction. So they're just seeing the small branches and they don't see the forest, okay? So, and that is a huge mistake. Okay, and that is why most traders miss these opportunities. So when we take a look at the weekly time frame, we see this large movement that happened in September 2025, the 22nd, and the beginning of October, November, drops December, and now in the end of December, January 2026, it's reacting, and there is a lot of room to reach $80 and even higher, but at least 80. Where we should be managing our long positions for this particular stock. So most traders, like I always say, they never see this coming. Why? Because they are obsessed with intraday trading. They want instant gratification, make money every single day. They want that adrenaline. They want action every day, every hour, every minute. Okay, and that is unsustainable over a long period of time. Moreover, if you've got a family and you've got things to do at home, a wife, children, you just cannot do that. Okay, the market doesn't care about your needs for excitement. It just moves according to supply and demand rules that govern our society, our civilization. We like it or not, you like it or not, it is how it works. So most traders miss these opportunities because they focus on short-term stock trading strategies and completely ignore the swing long-term at this weekly demand level in stock trading. And that is, like I said, a huge mistake, because when a bigger time frame like the weekly here at $73 take control, this is what is going to happen. Moreover, if we are trending up, which is the case for XCEL energy American stock, okay? So trying to trade against this or being unaware of these imbalances is like trying, I don't know, to stop a freight train with a scooter or a little car. It's just not going to happen, okay? And they don't stop trains, scooters or cars. I mean, they will be smashed. If not, watch some of the old movies. So what do we do here? So let me go one bigger time frame high. Okay, so look at this. This is a monthly imbalance here too. This is the largest candle in a long time too. Okay, so what happens is that month is trending up. It didn't pull back to this area of demand that we have here on there. It just rallied, and after a few months, new demand level in the monthly took control. Okay, and if we take a look at the weekly, we've got a weekly, and then we take a look at the daily, we've got this daily. But let's try and do something. I'm going to use the here. I'm going to use 3 time frames template. Okay, and I'm going to sync the symbols. So I'm going to use XCEL. So here I'm going to use the monthly. I think I shouldn't be syncing this time interval and sync. Then this should be the weekly time frame for this particular stock, and this is the daily time frame. And you're going to see all this now. Okay, so here we've got the daily time frame, the daily imbalance. Okay, very huge move. Here we've got the weekly, and here we've got the monthly. Okay, so now you will see what I mean. So these daily here, you take a look at my cross here. Okay, the vertical and the horizontal dash lines in the 3 time frames, and you can see here on the daily. This is why TradingView's multiple time frame analysis is great because you can see through one time frame by looking at the right and the left. you can see how the imbalances live or coexist within bigger time frames. So this daily demand level here is inside this weekly demand level, which is also inside this monthly demand level. So when those three align in a bigger picture uptrend, the odds for a reaction to this particular stock are very high. But like I said, if you take or use the 1 hour time frame and smaller time frames trying to scalp something out of this stock, well, you're going to miss the whole picture, okay? And you're going to miss the home run, obviously, okay? And if you don't believe what I'm saying, okay, just watch some of my videos. There are dozens, if not hundreds. And if you watch this video in a few years, you will see there are hundreds of videos where I explain what's going to happen before the imbalances are reached and after they gain control, okay, and how they play out. Some of them will not, obviously, okay? But you will see that. I mean, if I can do it, I have not studied anything in the past. I am not a banker. I'm not an economist. I didn't do anything like that. If I can do it, a normal average person like me, Alfonso Moreno from Center Forget, can do this, you can do this too. Okay? So this is the power of the nested imbalances, and XCEL, American stock, is a clear example of how lower time frame imbalances and price structure, okay, live within the fractality of the bigger time frame imbalances and price action too. Okay, so without overcomplicating things, what do we do with XCEL company? A monthly demand level is in control here. Inside that we have the weekly demand level, okay, at exactly $73. See, so this stock price today is at $8.70, almost $75. Okay, after a long rally today, which printed a new high. And inside this monthly and this weekly, we have the daily, okay, imbalance. So that's the nested demand structure, and this is very powerful. Okay, price is reacting where professional money previously stepped in back in September, October 2025, and when December candle took control. Okay, here, then now you can see January candle being printed a new bullish leg. Okay, so the context for this particular American stock is bullish. This is a swing stock trading position, long-term position. New bullish legs are expected from these areas, as you can see on the weekly and the daily, and also in the smaller time frames. And without needing news, earnings, or indicators or anything. So here, what is the next earnings? It will be next when 22nd of January. Well, that could boost, okay, the stock and help the stock rally higher. So this is pure price action and supply and demand together. So, and the role of patience, which is the unpopular truth, okay, nested imbalances don't reward impatience. They reward traders, stock traders who wait for price to drop down here, okay, observe and let price come to them. They don't chase the trade, do absolutely nothing most of the time. These are the type of traders that will be rewarded by these long-term imbalances. This can be seen also in smaller time frames, okay, but the smaller time frame, the lower its reliability to events, okay. So most traders hate this, impatience, okay, because they want to click buttons, to feel busy, to feel productive, to make money every single day. But trading is not a video game, it's closer to fishing, okay. You wait, and when the conditions are right, the market does the work and you get some fishes, okay. So XCEL company, okay, stock is reacting as we expected, and this is not magic, as I always say. This is not prediction. This is simply reading price action and supply and demand together in context. Okay, so when the smaller time frame, like the daily and the smaller time and lower than the daily time frame, respects the bigger time frame demand, and the monthly probabilities shift heavily in your favor. Okay, and that is the power of the nested imbalances, which is what I wanted to cover in this particular example. Okay, so if you truly want to learn to trade stocks, trading, understand price action like I am explaining it right now, hopefully I made my job, okay, correctly, and you want to trade with supply and demand imbalances, stop chasing intraday noise, then you must start respecting the higher time frames and the structures inside them. Trading is not about being right, it's about being patient enough for these trades for these imbalances to gain control and to let the market show its hand when you can see new bullish legs happening. And yes, sometimes the best trade is doing nothing, boring, yeah, maybe effective, yes, absolutely. So if you like this video and you want to learn more about supply and demand price action, well, click on the like button and subscribe to my channel. I will be glad to help you in your trading career. Have a great day.